Hello, this is Compound Interest Stock Guy. Today in this video, I'm going to be talking about Pan American Silver. Going to do the report card series. This is a little different than I usually do. I've been doing the cannabis stocks, but this is a company that I think has great potential in the silver and gold space. So I just wanted to give more information to my viewers and subscribers on this very interesting company. I also want to disclose I'm not a financial advisor. This is just for entertainment and information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you're pursuing. Or speak with a financial advisor. Yeah, so if you're new to the channel, hey, make sure you hit that thumbs up. If you're new, don't be shy. Subscribe. I talk about commodities and I talk about cannabis, and I look at fundamentals and technical analysis on a lot of these. I've also been doing the report card series and a lot of other different facets that are unique on its own in my own little niche. So yeah, if that's what you're into, don't be shy, subscribe. So let's get into this. And I also am going to be doing talking about why space is overvalued, and Jim Cramer agrees with me, right? So I'm not stupid. I kind of knew this. That's why I was doing puts on SPCE. Yeah, people can hype it up, say it's going to go to 200, 300. I mean, when it goes pumping, sure, it could go up to a certain level, but it's not going to stay there. So yeah, that's what's up. So anyways, let's get into this financial report card for Pan American Silver, and then we'll do that after. So Pan American Silver, PAAS, they also have connections with Wheaton Precious Metal, kind of funds them as well, and then they have to give them back a little bit of silver and gold because they're like a royalty company, so they kind of just give them money to fund their projects and stuff, and then Wheaton Precious Metal ends up getting back gold and silver every quarter for super cheap, right? So they have a good thing going, but I like the prospects on PAAS, where I've been talking about them a lot on Twitter and a little bit on YouTube here and there. But let's get into this. Okay, so the big headlines was they post record quarterly cash flow from operations of $129.5 million in Q4 2019. All right, so the last quarter in 2019, strong low-cost production generated operational cash flow of $282 million in 2019, which allowed Pan American to retire $60 million of debt. Okay, so that's very interesting. $282 million, and so 129 times 4 is above $500 million. So if they did it every quarter like this, they would have done close to double the cash flow for the year. So and they also retired $60 million of debt. So with that said, is based on the commodity prices, gold and silver going up, continuously going up. Every dollar that silver goes up, every like $50, $100 gold goes up, is just like a great amount of net income and free cash flow for the company. So that's awesome. So, and they did a dividend of approximately $29 million to shareholders, invest in new projects such as our La Colorado Skarn discovery, and increase our cash position. Another thing they did, they said they're expecting silver and gold production growth of approximately 7% for silver and 16% for gold. So that's awesome. 16%, right? I mean, especially with increasing prices, I mean, that's a double whammy. If you really have to look at the perspective that if gold is to remain above $1,700 in 2020, even at those levels, if it doesn't even go to $1,900, just the fact that they're doing 16% more gold production and 7% more silver, and especially if silver goes to 19, 20, 21, 22, every dollar it goes up, it's just awesome amount of cash flow that the company earns. So just want to share that. And revenue in Q4 totaled $404 million and $1.35 billion for the full year, right? So This is a company that makes over $1 billion in revenue, which is awesome. And in 2020, I've already done the kind of I looked at the specs. They're talking about 625 to 675 thousand gold ounces, and then it was like 27 million silver ounces. Okay, so based on the 27 million, like if it was at $18, you're talking about like 500 million in revenue. And then the 625,000, times that by even 1,500, that's, you're close to $1 billion. You're like 900 million to $1 billion. So, and then you get to 1,600, you're above that. So when you're talking, you're going to be talking about 1.5, 1.7 billion, 2 billion potential for 2020. So, and every $50-100 million that they're not gonna spend much more, right? So they also get lead, silver, and zinc. So it's a very interesting company. They're very diversified, as well as copper. So it's not a lot in that thing. It's basically about 10 to 15% of their revenues. But regardless, I'm just like, this isn't just about the report card. Since I'm on the subject, I might as well share it in as much detail so you guys get the lowdown. So then I don't have to kind of visit this another time. I mean, I may visit it, but at least now you guys got a base level understanding on this company, and then we can move from there. So net earnings in Q4 2019 and the full year were 51.7 million. Okay, so that's 25 EPS. That's awesome. Like based on a year, that's like a dollar EPS. What I want to look into this is if they're basing it in US dollars. So that I'm not sure. I'm thinking it's in Canadian dollars, to be honest. But so there's difference, right? There's like 30% difference, right? So that's an interesting thing to understand. But when I did the math, I think it was all in Canadian dollars when I did that. So, actually, no, it was in US dollars actually. So yeah, that's awesome. So I mean, there's a lot of value in this company. Net earnings included a 40.1 million impairment charge related to the Minetto Espejo mine in Argentina due to the increase in export taxes and the challenging business environment in Argentina, partially offset by 33.7 million in investment income, largely related to our approximately 17% equity interest in New Pacific Metals Corp. Okay, so that's an interesting thing to understand. Is an Argentina isn't maybe necessarily the best location to run a mine, so there is more risk in owning this company than in a wheat and precious metal royalty company, because wheat and precious metal has their locations, like they're dealing with all these different companies, right? So if one of their mines, like the big mines in Pan American Silver, went down, like that's a huge hit to the company. But if it happened to wheat and precious metal, they're not going to take the hit as much, because they're working with like, I don't know, like 10 to like around 15 to 20, I think, different companies. So they're very diversified, whereas this is more like centralized, but there's more upside potential, I think, based on the prices of silver and gold going up. But anyways, let's go on. Silver and gold production was 25.9 million ounces and 559.2 thousand ounces respectively. Okay, so I mean, if you look at, I'm thinking it was about $15 average for the year. So you're talking about like 800 million, like 750 million in revenue for silver, and then oh no, that's in gold, sorry, my bad. Yeah, that's probably somewhere around the same, because it was like an average about 1,400 in 2019, or maybe it was like 1,300, so somewhere around 700 million. And then this was like close to about 15. So yeah, it's like about 1.1 billion in revenues for silver and gold, and then you add in another for the lead, zinc, and copper. I mean, silver segment cash costs and all-in sustaining costs in the full year 2019 were $639 and $1046 per ounce sold. So that's good. Gold segment cash costs and all-in sustaining costs in 2019 were $712 and $948 per gold ounce sold. So respectively, both of which were below the company's annual guidance for 2019. So cash costs, yeah, the gold segment consolidated silver basis all-in sustaining costs in 2019 was $444 per silver ounce sold, which was way below the company's 2019 annual guidance range of $6 to $750. So that's really good. I mean, you're talking about like close to about 70%, 75% profit margins. Maybe not that, about 60, because yeah, somewhere around there, 60 to 65, I believe, the profit margins, without having a calculator to do that. The company had a cash and short-term investment balance of $238.3 million and $275 million of bank debt. Working capital was $517 million. Okay, so that's good. You know, when they got more working capital than their debt. So in 2019, Pan American paid $29.3 million in dividends, 14 cents per share. So, you know, if you had 100 shares, you'd be getting $14 for the full year. If you had, 1,000, you'd be getting $140 per year. So it's not a huge dividend, but it's something. And, it's not super, it's kind of rare to get a dividend in some of these miners, but it's going to be more moving forward, especially as the price is going up. I can see these companies raising their dividends because, it's just a good way to pay back to their shareholders. So that's my thinking. I've watched a lot of videos. So the board of directors has approved an increase in the cash dividends from 0.035 to 5 cents per common share for approximately $10.5 million in aggregate cash dividends payable on or about March 12th. So that's a quarterly dividend. So then you're talking 20 cents per year. So that's great. Then it's like about 30% more dividend you get in that company. Okay, let's move forward. All right, let's do the revenue. Okay, so 404 in revenue, that this is in millions, and mine operating earnings 98 million, so that's great. And then the net earnings was 51.7 million, and basic earnings, as they said before, was 25 cents EPS, and adjusting earnings was 68.9 million. Basic adjusted earnings per share was 0.33. So the basic adjusted earnings, I'm not sure exactly what that is. Maybe it's to do with the dividends or stuff like that were included in that, or some other stuff. Sustaining capital expenditures 46 million. Net cash generated from operating activities before changes 124 million. It's awesome. Cash dividend per share 3.5 cents. Okay, so there we get into the thousands of ounces of silver. Okay, they did 6.62 million ounces of silver, and then they did 173.9 thousand gold ounces. Wow, that's huge. That's freaking huge. Wow, they're gonna crush it in 2020. Because they were talking about 625 to 675,000. I mean, unless I'm missing something where one quarter is going to be less or something like that. But based on that, doing that, that's like 700,000 gold ounces. Yeah, man. At like $2,000 gold, that's close to like 1.5 billion in USD. Like, that's a lot of freaking money. Now you get into the tons of for zinc, lead, and copper. And this is 16.6 thousand ounces of zinc. And then for lead, you get 7.2 thousand ounces of lead. And those, I mean, without checking them regularly, but they're usually somewhere around like 70 to a dollar per pound in US dollars. So just something to look into when you're trying to do the math. When I was doing the math on it, you know, copper is trading around like 2.6 per pound. So copper had 2.3 thousand tons. So when I did that, I was I mean, it was just an approximate when I was trying to do the revenues for 2020, because they didn't lay it out for me on the investor presentation. But I basically would add these together. So it was like 23,000 tons. And then I divided it by 3. So it was like, you know, 8 or 7.5 thousand tons. And then I added it to the copper. So then it was like, oh, it was like 9 or 10,000 tons for this quarter. And then I would just do the math, like 9,000 tons, and then times it by 2,000, because a ton is 2,000 pounds. And then I would times it by the 2.6 for the pound to get what it was. So yeah, I mean, I don't know the exact number what these are. It doesn't show me exactly what these are. But I did get a very good understanding, and it shows you a pie on the presentation where it says it's like 15% of their revenues are in these zinc, lead, copper, and then in silver and gold is the majority, right? You know, it used to be mainly just silver, but they just picked up a gold mine, and like they're crushing it. Because yeah, I mean, just look at it, look at this, the difference between 2019 and 2018. Okay, so they used to get 24 million ounces a year, and that was in 2018. And then in 2019 they did 25.8 million ounces, and the price went up for the most part in 2019, but it's going up further now. But with gold, you had 178.9 thousand ounces, and now watch, look, in 2019, 559,000. That's like 3 times more gold. So I mean, frick yeah, I mean, and they're just gonna do more. Like based on this quarter, you're looking at like 700,000 gold ounces. I mean, that's versus 170, like that's 4 times more. Like they did the same amount pretty much for the whole year of 2018 in gold ounces that they're doing in just 1 quarter. So just get that through your brain. I just turned on my light. Yeah, so let's go. And the silver price, the silver cash costs have gone up, it seems. So it used to be 3.36, and this was 7.8, and then it was 712 for the full year. Now it's down to 693. Wow, that's great. I love to see reductions in prices that it costs to make the product. All in sustaining cost, silver segment 11.37, and gold segment 901 is for the year 1046. So it was a little cheaper for the whole year. And for silver, so their silver prices have gone up to get every ounce out of the ground, but their gold is going down. So it's good to know that. Consolidated silver basis. Not sure what that means. You know, this stuff's a little bit new to me. I mean, I'm a lot more knowledgeable on reading financials for cannabis stocks, but you know, I have a pretty good understanding on this stuff as well. Silver ounces 17.84, gold ounce 14.79. That's their realized prices. Okay, so now look at it from the full year: 16.34, 14.06, and this was last year's quarter, 14.35. That's like 3.45 more. And their gold ounce, they're getting like $250 more per ounce. That's a lot. That's a lot. Especially when they're getting more ounces out of the ground. That's a lot. Every dollar, I mean, every $25, $50 is a lot to their bottom line. Gold ounce is at 14.06 and 12.72. So now let's get into the zinc prices. So yeah, the zinc prices is 23.25, so a little over $1 if you divide it by the 2,000 per ton, and then lead, it's about $1, as I said. So yeah, I mean, I'm pretty much on the ball as far as that, like about 3. You know, it's an approximate, right? Just gives you a little bit of better understanding if you do that math. And copper per ton, 5,000, 5,840. So yep, that's their realized price. So the prices are down from last year. They were getting about $200 more, $250 more per ton. So that is something to think about. And they're up 0.1 for the tons that they've done this year for the quarter, and for the year they're down like 1,000 ton. So yep. So this is what they're talking about. Their forecast range, they beat it. Like they hit in the middle for their silver million ounces, 25.9. They want to do 25.3 to 26.3. That's great. In the middle, gold 1,000 ounces, 559.2, 550 to 600. So on the bottom range, they didn't really knock it out of the ballpark for their gold. They had very high expectations. And then zinc, 67.6 thousand tons. They beat it by 0.6 thousand tons. And then they really beat it for lead. They did 2.3 thousand tons more. And then they lost on their forecast for copper at 9.8 to 10.3 thousand. And they only did 8.7. So, yeah. And now we're talking about capital expenditures. Sustaining capital, 179.2. So they spent less in their sustaining capital. And for their sustaining capital forecast was 203 to 213. So that's great. That's awesome. They're trying to be very cost efficient. And, you know, that's what I like to see. You know, I'm very loud about that in the cannabis space and companies that aren't spending wisely. So, you know, I like to see them beat that by like 25 to, you know, 30, 34 million in their ranges for their sustaining capital. Now for their project capital, they also beat that by 1.4, and they spent 43.6 million, and they beat it for the total capital by 24 to 36 million. So that's great. You know, more money for them to pay their debt, or to, you know, increase their cash, or to pay back, you know, their earnings via dividends. So, you know, I like to see that for sure. I'd rather see the money go back into shareholders' pockets or their, you know, their cash, than to see it go into the hands of the company. So, but, you know, they were down kind of for the year. They must have done a loss somewhere, or they spent it on acquisitions or something. But their cash and cash equivalents was 120.5 million. And they were, in 2018, they had 18 million more at 138 million. So short-term investments of 117.7 million, and trade and other receivables 168.7 million, income taxes receivable 17.2 million, and inventories really bumped up. So it's not so bad when you see the cash equivalents down, when you start to see the inventories up. 132 million. So maybe they are doing that on purpose because they believe that the prices are going up. That's what I've kind of seen without talking to the management, that it seems as though when the companies, they think that the prices are going to go up, they're just going to hold on to it and then wait for the prices to go up, and then they can cash it in. So, you know, that's intelligent. You know, gold or silver is not going to go bad sitting in their little vault. Yeah, maybe if they don't have enough space, then sure, sell it off. But I've seen it on, you know, the Alaska miners or whatever, where they'll just kind of like hold on to a piece of gold, like maybe they got 10 or 30 ounces or whatever, how much they have, and they melted it down, and they're like, oh, well, I don't want to get paid yet. I'll just, I'll wait on it. And then when they do need to get paid, then they'll they need to pay their workers, then they'll offload it. But yeah. Mineral properties, plant and equipment, 2.5 million. Inventories, 24. So this is non-current assets and long-term refundable tax, 17.9 million, and deferred tax assets, 36.4 million, and investment in associates, 84 million, and goodwill and other assets. Goodwill and other assets very low. So, nothing like Aurora Cannabis where they got to write down like 750 million or $1 billion. So, hey, that's great. All right, let's move forward on liabilities. So accounts payables, 225 million, and current portion provisions, 7.3 million, and current portion of lease obligations, 14.19 million, and income tax payable, 24.7 million. So liabilities are 271.67 million. All right, long-term portion of provisions, 188 million, deferred tax liabilities, 176 million, long-term portion of lease obligations, 27 million, and debt, 275 million, and deferred revenue, 12.5 million, and other long-term liabilities, 27.7 million, and share purchase warrants, 15 million. So total liabilities, 993 million. All right, so then you look at the assets, 3.4 million minus the liabilities, you're talking about somewhere around 2.5 million in assets. So based on their book value, they're about 2 on their book value, but you have to look at it as far as a cash flow company, and that the price of silver and gold is going to go up. So production costs, yeah. They already went over this. Well, anyways, it says 25 cents diluted EPS. So yeah, that's pretty much what's up. I don't think there's really much more to cover on this, other than cash flow from net loss, earnings 51 million, operating cash flows. So before that's the EBITDA of 147.9 million, and yeah, 129.47 in net cash generated from operating activities, and the 51.5 in investing activities. Okay, so yeah, they're gonna have a conference call tomorrow at 11 o'clock. Where did they say that? Must say it down here. Yeah, so right down here at 8 a.m. Pacific time or 11 a.m. Eastern time tomorrow on February 20th. So you can dial in 1-800-319-4610, or you can go to the panamericansilver.com and watch the webcast for the video of the conference call and listen to the question and answer session. So that'll be more in depth than just reading this, but this was a great summary. And I think the operating quarterly cash flow of 129.5 million is great. So I basically, I want to give them an A minus. Parts of me could say, well, based on their market cap and all that maybe they should be like a B plus, but I think they deserve to get an A minus. I think these were pretty good numbers, especially when you look at First Majestics, which I didn't dig into, but they did 0.5 cent EPS for the quarter. So this is 25 EPS. So hell of a lot better. Yeah, 25 EPS, a hell of a lot better than 5 cents EPS. So I really do think they deserve an A minus. PAAS, I know they are kind of going up in price. Let's look at their price for now. Let's just kind of run with gold and silver. Yeah, this is in USD, 24.63 per share on a market cap of 5.15 billion. So when you look at their PE ratio, this is based on like 2019 or later. It's probably not updated, but regardless, if you look at 25 cent EPS, and then you times it by 4, then you get $1. So then you're talking like 24, or if this is in Canadian dollars, then you're talking like 30 PE ratio. So very reasonable, and their EPS is only going to improve based on what they're saying. As long as they execute, their EPS will improve. So it's just, the only thing is execution risk, but based on the silver and gold going up, 2020 could be a very profitable company for the whole silver and gold space. This company could be super profitable. Yeah, I mean, it's just awesome that what they're doing. And I wish I would have found this company a lot earlier, but I do think there's a lot of room to grow. 18, like this is $15. So I mean, I wish I could have found it out at like $9, $9, but that's just life. That was back in 2019, February 25. This is when silver was really low, but there's a lot of, like, look at how high it went here, and now they have a gold mine. So I mean, I can definitely see it beat this, go to 50, 60, 70 before the end of the year, based on gold and going up 10 to like 20%, and them executing on what they're trying to do in the space. So now we're gonna so A minus. Parts could say B plus based on their PE ratio or whatever. I'd like to see it be a little better. Basically, like if they did 50 cents EPS or $1 EPS, like that'd be freaking fantastic. Then it'd be like, holy shit, that's an A plus of a report card for their market cap, as well as what just the EPS. But without that saying, these companies are just starting to make profits. They had a lot of years that they weren't making profits, like back around here and stuff, like back around here, and now they're just getting primed to get a lot of net income based on every dollar silver goes up, and every $25 to $50 gold goes up, and the lead, zinc, and copper going up. So there's a lot to like about this company. But now we're gonna watch Jim-Cramer. Let's talk about space. It's just a little short skit, and then I'm going to end this off. So let's do this. Jim-Cramer's talking about SPCE, and I did a put on it today. I made a few dollars, not as much as I'd like, but I didn't lose money, so I'm not unhappy about that. And I just got it out of the way when it started going up later in the day. I didn't expect to make too much money, and it's just really disciplined on my options. It's just get in and out when you're doing the options, especially when they expire or very quick. So the one I had, I think it was to expire February 21st, and I just did one put, right? I'm not getting 5, 20, or 30 puts. I just want to work up small, and then grow my stance, grow my style, grow my skill set, and then work up to a higher size where you do like 2, 3, 4. But I gotta be more, have better conviction and all this stuff, and I just gotta just manage my portfolio, like as far as the sizing, right? And I'll just say, if Sheldon's watching this video, he was saying that he got out of SPCE at $17, and he got his 23%, and he basically saying that he thought it was going to go down. And there's never certainty that a price can go down in a stock, but sometimes, I think it's wise to reduce your risk. So there's different things you can do to reduce your risk. You could just have like a put as well, then that would hedge your risk. So say you were like long, and then you had like 2 puts, good for the remainder of how long you're going to have your position out, and you pay for those, and that's going to hedge your risk. So say all of a sudden it starts going down to like 15 to 10 when it's at like $35, you're going to get reap the reward, as long as you don't pay too much for that insurance. Or you could just scale out of the position, right? So say you had like 500 shares, then as soon as it hit like $25, you could sell 150. You could sell some at $20, like 100, and you could sell like another 100 at 30 or 35, and then you could keep like 100 to 200. So then you still have like 20 to 40% of your position. But then when it starts going downwards again, then you can just like completely liquidate all your position and get out of it. Or you could play the downside as well as with your hedge. You could have the hedge when it was like $36, $37. You could have it till like maybe March or April, where you'd have like a $22 or a $25 put, and you know, whatever you're paying for that, like $200, $300, $400. Then if it goes down to $10, then you're gonna get like some money back. So anyways, let's get into this little short skit.
Quote, might dominate or even monopolize space tourism, end quote. Sounds good. How speculative is this thing? Well, Morgan Stanley argued that the valuation was quite reasonable. Quite reasonable. When you look at the potential earnings before interest, taxes, depreciation, and amortization in 2030. That's right. They needed to look 10 years out. In a clear day, I can see forever. I saw it with Barbara Streisand years ago. And to justify this thing. And since then, the stocks rallied another $14. Now, yesterday, they published a piece after the stock surged 21% last Friday. This time, they noted that the driver here was a not very important test flight. But that hasn't stopped Virgin Galactic stock from roaring. This thing has made a lot of people look like geniuses. Credit Suisse tried to bring you back to earth on this. They published a piece using a $12.43 price target when the stock was trading at $9 in November, and you couldn't give it away. But listen to this list of risk factors. Quote, given the unprecedented and largely untested nature of this business model and product offering, there are significant risks to investing in SPICE. These risks include lower than expected demand, scheduled slippage of the first commercial flight, higher than expected flight costs, or an operational accident, end quote. Still, that wasn't enough to scare them away. People are very, 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 very excited about this thing. I know this because I've seen Virgin Galactic pumped relentlessly on my Twitter feed, and then on the incredible, let's just say, canon of gospel even of stock thinking Reddit. These are bad places to get information. But listen to some of this stuff. Quote, Virgin Galactic SPICE is going into orbit. Have that one for free, Kramer. Oh, thank you, poster. Thank you so much, Jimmy Chill says. Then there's, quote, I'm up 300% in SPICE in like 3 months. Don't you like the like? In like 3 months, thinking about dropping out of college. You know what? Maybe I should. Or maybe get a grammatical lesson. Hey, I got one. Encapsulates all of them. You can't make this stuff up. Wait. Anyway, this one says, quote, I don't know Jim-Cramer, but I have a bad case of FOMO and just bought some SPICE. Now, end quote. The amazing thing is the guy made a killing. I mean, if he rang the register, he made a lot of money. But do you think he did? Listen, for all I know, space tourism could turn out to be a real industry. But for heaven's sake, if you own Virgin Galactic, hey, the FOMO guy and the guy who's thinking about dropping out of college, don't quit your day job either, Chief. I think you ought to ring the register on some of this stuff. I don't get greedy. And believe me, I'm telling you, thank me. You don't have to do it all, but just some. And look, it's not just this one stock. You got Enphase Energy. It's up by a cool 42% today. Why not?
All right, there you heard it. Basically exactly what I was saying. You know, there's people that are so hyped about this stock, and there's a lot of FOMO going on, and you know, he's saying to scale out of the position, hit the register, and I agree with him, hit the register. And you know, who's to say, you know, maybe it goes to 50 tomorrow or early next week, but one of these days it's going to drop hard, and you know, I'm going to be ready for that to make the money. But anyways, keep compounding your info, listen to my lingo, and shaka Peace. I'm out. Thanks for watching. Thanks for listening. And I'll be doing more videos later on. So if you haven't hit that like, make sure you hit that like and subscribe for future content. And I'm out.